to the Q&A, the advanced Q&A. But before I ask the advanced Q&A, let me just start out the Q&A session by asking you some questions about, your freshly announced asset infusion. As you said, you'd be injecting some malls. Maybe you could share with us what are the implications this would have on the shareholders.
Actually, what we've announced is 9 malls to be infused into RCR, subject to our regulatory and shareholder approval. The 9 malls is about 324,108 square meters of additional GLA. So if these infusions are approved by the regulatory and our shareholders, this will bring our total gross leasable area to 1.15 million square meters of GLA. So this is important because we've surpassed the 1 million square meter milestone for the gross leasable area, and more mall assets, because currently pre-infusion, which is it's in its current state, the contributions of EBITDA for RCR is 80% offices and 20% malls, and hoping that post-infusion that the contribution would even out among both assets.
I see. And what would be the projected market capitalization of RCR post-infusion?
Well, post-infusion, it's the hard to determine market cap, as it will include, it will indicate the share price. Now, what we have announced that the increased number of shares, RLC will be getting about 3.8 billion more shares as payment for the assets that will be purchased by RCR.
But that said, I mean, why? First of all, let me ask again, like, I think you kind of talked about it, that, I mean, the importance of having malls. Like, why are malls more, I guess, more attractive today compared to offices? Because, prior to this, you're 80% office, as you said. But of course, one of the things you highlight is now will be like a more balanced street with 50% malls and 50% offices. So, I mean, why is it important? I mean, why is this something that you're proud about?
Okay, I guess we're proud about our malls because I think malls excites Filipinos. I think most of the Filipinos go to the mall at least once or twice a week. So everybody loves going to the malls, and to further capitalize on this, the malls actually have two revenue streams. One is a fixed rent, from which there's contracted rent per square meter occupied by our tenants. And secondly, which is the variable rent, meaning to say a percentage rent. As a percentage of the sales of our tenants, we charge, RCR will charge rent. So it reflects, most kasi reflects the Philippine consumption story, the Filipinos consumer story, the Philippine growth. So, and we've noticed from the sponsor that in previous years, the fixed component in terms of contribution tends to outgrow the contribution of the percentage rent. And what we've seen in the recent years, especially last year and in the first quarter of this year, that the variable rent has actually the growth of the variable rent has actually outpaced the growth of the fixed rent. So there's technically unlimited upside, right? As the consumers keep on spending in our malls, that means that the rents will keep going up, and our revenues will keep growing up.
And I see. And I'm just curious about competition in terms of malls versus offices. Which is more competitive in your opinion? I mean, leasing out offices or leasing out malls?
There are two different asset classes. It's hard to determine which is better, one over the other. But I guess there are different strengths and there are different challenges among each asset class. It's like your kids, like
Well,
you treat everybody the same.
Yeah, they're like I always tell my children, you're all special.
Yeah.
But anyway, I guess I mean one of the things that like when I wrote the report about you, one of the things that I highlighted is the increase in the market cap, which of course we don't know yet, but that's 3 billion additional shares. I mean, it's also one of the things that you highlighted, how you've become bigger. Why is becoming bigger important for you? Or I mean, what are the benefits of becoming a bigger REIT?
I guess becoming of a bigger REIT in terms of size, which hopefully the market capitalization will follow. It allows the opportunity for bigger funds to buy into to RCR in this case. Because as you know, like funds, they have a limit. That example, they cannot buy X% of the company. So example, an X% of a 50 billion market cap is much smaller. Whereas compared to example, you're buying 5% of 50 billion company and 5% of a 100 billion company, it makes a difference, and that will allow more foreign funds to come in. And then secondly, I think it's also important that liquidity. So as you know, as investors, that's why people like investing in the stock market. It's easier to buy and it's easy to sell. So I guess there are two factors which is important to us.
Yeah, okay. So anyway, we can now move on to the advanced questions. So okay, let's see what they are. Okay. So now let's begin with the questions on the industry outlook. Um, okay, I guess, right now, everybody's talking about the glut. So how is the current glut in the real estate industry affecting RCR? So with the influx of residential and commercial buildings, how are we assured of the future of its investment? So questions from Rodrigo and Maricel. So yeah, I guess um they're talking about both residential and offices. Like, how would that have an impact on you? Because we know that there is an oversupply in offices and residential. So yeah, I'll open the floor to you and you can answer.
Okay, I think firstly, our CR as a REIT company, it is only allowed to own income generating recurring income generating assets, or what we call in real estate as the investment portfolio. It collects, it generates income on a monthly basis. So it does not own any residential properties, which are basically development portfolio, as we the term used for our real estate properties. So I think what we want to highlight with RCR, with malls and offices already, and so we have contracted we have contracted rents with our tenants, and we have built-in escalation clauses, and which we believe that it will provide more upside for RCR. And I think in terms of challenges, I think the offices have, in general, have notable challenges in the past years. But I think we have reached already an inflection point, and we think the offices are already bottoming out as we see more reporting to work, and as we see more new types of business processing outsource tenants coming into play and renting from our buildings.
I see. That's good to know. I'm just curious about this question. There's this question about how does the popularity of online shopping apps affect, I guess, how will it affect your mall REITs?
I guess during the height of the pandemic, we have the online part grew tremendously, and at that time, that's why we started with offices. Everybody thought, oh no, that everybody's gonna go online, and the malls the profitability of the malls will be reduced. But after the pandemic, it actually all those speculations were dumbfounded. Parang on the contrary, our foot traffic recovered very fast. We're even higher than pre-pandemic levels. I guess as human beings, we are social creatures, and as Filipinos, we really like going to the malls. But aside from the aircon, it's because there's in the malls in the Philippines are quite unique, in which you can do a lot of things in the malls. Like in RLC malls, we have a link with Pinoy, which you can do government. You can do. It provides government services that we can avail: driver's license, passports, etc. You can actually do other ancillary services. There's dentists, there's a barber shop, and the likes, no? So I guess malls have become really a part of the Filipino culture and become a Filipino way of life. That's why we're so excited with malls also.
Yeah, I guess, I mean, yeah, you can do your shopping online, but you still need to do other things.
Yeah, you need
No?
to see physical things.
Yeah, I mean, and especially, I guess, as you said, there are other things that you can do. And I think right now, if you go to the Robinsons Malls, marami ring restaurants, di ba?
Yes,
So it's
there's a
more like
lot
a
of them.
lifestyle mall, right?
Especially the younger people, they like going to the malls, like they're taking selfies, Instagram, etc. Across
Yeah, so
experiential.
still okay.
Yes,
Yeah.
still very
Okay.
okay. Yeah.
Okay. So you're not affected by the oversupply in residential because you don't have naman this residential, your
Yeah.
office and malls, di ba?
Around this.
Okay, so let's move to the next question. Okay, so the next question is focused on your growth plan. So what are RCR's plans for expansion on acquisition in the next 3 to 5 years, and how does this impact investor return? Okay, and I guess like 'di ba you disclose nga the 300 billion market cap. Ito nga kinompute na nga ni Shane Francis, sabi niya 67 billion in asset infusions every year. O, di ba? So yeah, maybe you can talk about your growth plans.
I guess I guess to take things into context, no? What I said, what is infused into because RLC, our sponsor, has investment properties. No? They're worth about close to 20 billion pesos of EBIT is in for investment properties. And then what is infused in RCR now is about 1/3 already of its EBITDA. So there's potentially 2/3 more potential assets to be infused. But this is subject to a lot of things, no? Subject to shareholder regulatory approvals and subject to the compliance with the minimum public ownership of the PSE. So as you know, REITs are required to be 1/3 of its outstanding shares are required to be publicly owned. So uh, if I may, if the trust is to infuse more assets into RCR, we can actually do it in various ways. No, number one is a property for actually in three ways. No? One is through a property for share swap, or number two, RCR can borrow using debt and then buy the assets from the sponsor. And then third, a combination of both. It's a hybrid of debt and equity. Right? So there are actually three ways, but that's how the potential to grow to 3 times its current state, to grow our share in its current state.
I guess, like my question is, what motivates, or I mean, what's the incentive for, say, RLC to actually infuse, um, to infuse those assets into, or to send those assets to RCR, because we have a lot of REITs and they all have sponsors which have a lot of rental assets. So what is the incentive of RLC to inject? I mean, does it have something to do with, I mean, RLC's 5-year plan, the Vision 52550? Is RCR part of, the whole, I guess, the whole plan, where, it would help them raise the capital to grow faster, etc. Maybe that's something you can talk about.
Sure. I guess what's important for when REIT was developed, the process of REIT is actually recycling of assets. I think RLC and RCR both complement each other. I think one one complements each other. What's important for RLC to infuse assets into RCR? Number one, as it's infusing assets into RCR, remember when it infuses assets into RCR, it still earns dividends and corresponding fees from RCR. So in terms of cash flow, it recovers its cash flow. And then secondly, I think it's important in terms of complementing each other, that through the recycling process, remember when RLC sells assets, to RCR, these are valid based on a discounted cash flow model. You need to say it's a function of future cash flows. In books, as the assets are in RLC's books, it actually it's recorded at its using the cost method of accounting. So we are on the RLC side, it has an asset, it depreciates through time. The book value means to say the price it was purchased and depreciates over time, it goes less and less. And as we sell it to RCR, it's actually plus minus, it's about 4 or 5 times its current book value. So it crystallizes its value. That's why it's important also to infuse more assets into RCR. Because if you remember, RCR has just it's just a fraction of all RLC's assets. So it crystallizes. It makes it clear how much valuable RLC is. That's why it's important also for RLC to keep on continuing infusing assets into RCR.
I see. Okay. Can we move on to the next questions? Okay. So next we have questions on asset infusion. How will investors gain from an asset infusion? Infusion doesn't significantly increase dividend yields. This is according to Ralph. And how do we ensure retail or minority shareholders are prioritized versus the parent company during a property infusion? This is from Neil. So yeah, maybe you can answer this because you have an upcoming asset infusion. Maybe you can talk a little bit about, I guess yun ang tanong, parang when we wrote about it in the daily, there were people who were asking, so what does this mean in terms of dividends? Yan ang tanong.
I guess to answer that, no, the current mode of purchasing an asset from the sponsor is through an property for share swap or an asset infusion. So I'd like to clarify also that syempre, people tend to think that if there's a property for share swap, RCR will issue more shares. So there's possibility of dilution. That is correct. But what is important when considering for a property for share swap, RCR ensures that all purchases are dividend accretive. Meaning to say, as you purchase the asset, the dividend per share should increase. So how are we able to measure that? So we look at the assets that will possibly be injected and what's its corresponding effect in the increase of dividends. So we make sure that the increase in dividends is greater than the increase in number of shares. So henceforth, as long as your dividend increase is greater than the increase in the number of shares, that will provide a sense of that will result to a dividend accretiveness because the dividend shares will increase even if the number of shares will increase.
So in other words, the DPS, dividend per share, has to go up even with the additional shares issuance.
Otherwise, people will blame, why did you still infuse, right? So I think that's the whole concept. All infusions have to be dividend accretive. And then
to every shareholder.
Every shareholder, it's dividend per share. For every share, there's a corresponding increase. So how do we ensure, I think to answer your second question, I think so far in the past acquisitions, the that is price in which the price per share in which the assets are pegged are basically higher than the volume weighted average price. So this means that the number of shares is lesser than the as compared to issuing current prices. So that's because we want to maintain the accretiveness of the acquisition.
So, for example, for this set of asset injections, the shares that you will issue to RLC are valued at 8 peso per share.
Yes, that is correct.
So, yeah, that is actually good for the minority shareholders.
Yes. Yeah, as compared to now, the shares trading is about close to, I think, 7 pesos. Right? So.
Yeah, so because the shares are more expensive, you don't have to issue as many shares.
Yes, that is correct.
Okay, sige. O at least good news for investors, ha? Huwag kayong mag-alala dyan.
Kaya
Don't
mag-alala.
be worried that, oh, bakit ganyan? Taas. You know. Okay, so let's go to the next question. Okay, questions on potential index inclusion. I think ito yung isang exciting, no? Usong-uso. After a REIT, does RCR have the chance to be included in the index, and how likely is this according to Edison and two others? Okay.
I think I will I leave that answer to you.
Pero yeah, I mean, so how many shares would RCR have after the asset infusion? Maybe, they can do the math themselves, di ba?
Yeah,
What
you can
how
do
many
that
how
now.
many shares would you have after the asset
Currently
infusion?
the number of shares is at 15.7 billion shares. So the targeted number of shares, assuming we obtain regulatory and shareholder approval, is about 3.8 billion shares additional. So total outstanding issued and outstanding shares should be about 19.5 billion shares. So you do the math.
Okay.
Thank you.
Yeah, so you can do that like 19 plus times, the share price. So yeah, that's the market cap, and then you can compare it to a REIT. And then from there, if a REIT made it to the index, then what is the likelihood that RCR will also be included? And I'm just curious, Kerwin, like, do you already have a timeline for when everything will be finished?
Actually, the timelines were based on past what we've achieved during the last infusion. So as you know, timelines are well, historical performance is not a
Yeah.
true. It might be an indication, but it might not be the final. It might not be exact.
Okay, okay. Sige. Anyway, at least meron ng shareholder approval.
Wala pang board approval pa lang. So there's
Board
targeted share
approval.
approval
Okay.
by August this year. So I think
Okay.
per PSE rules, there are a number of days from board approval. Then there's a
Mm.
required number of days that we're required to submit it for shareholder approval. And then the target date is August 2025 for shareholder approval.
I see, I see. Okay. Sige. Okay, so let's move on to the next question. Okay, questions on investment highlights. So what are the top three growth drivers, and conversely, the top three factors that will hinder the continued success of RCR according to Ronald? And, what are the fundamental aspects that make RCR a good buy? Paul Anthony and six others asked this question. So I guess, yun nga, growth drivers, and what risk factors do you look at?
I guess with risk factors, we look at number one, syempre, REITs are actually interest rate sensitive. So we look at interest rates. For one, the 10-year BVAL is a particular popular benchmark, or the benchmark being used by us. So essentially, in order for that, the yield should be more than the 10-year BVAL in order to make it the share price more attractive, or the dividend yield more attractive to shareholders. I guess
I see.
fundamental aspect that makes RCR a good buy, it's a multi-asset REITs. It's composed of offices and malls. It's present in 18 key locations. So what's also important, that we're present in many locations, is that of course there are risks involved, right? So as so the more locations you have, even if one asset is at risk, the others will be able to offset or subsidize the other assets' performance. Right? So it's also important for us.
Yeah, I guess well, right now there's an oversupply of offices here in, Manila. Like even in
Yeah.
Manila, you have pockets that are, have shortage in areas where there's oversupply. So being in different locations would help, at least mas resilient yung rental income.
Yeah.
Yeah, so that's good. And I guess, the fact that you are going to become bigger. Well, you're quite big already as it is, right? Yeah. Plus the fact they've become bigger, I mean, kind of makes you more
So
attractive even to foreign investors, right?
yes. Are also our because I think it's a good job of our property manager, no? So our assets currently maintain an occupancy rate of 96% for both offices and malls. So hoping that would still continue to increase, if not maintain.
Okay. Yeah, okay, that's good. Okay, let's have the next question, please. Oh, ito naman, what's your competitive advantage daw versus other REITs? So, yeah,
I think I
according
cannot comment
to
on other REITs.
Rainiel, yeah. Ah,
Yeah, I cannot comment on other REITs, but I can just comment on RCR itself. No? What is the advantage for RCR? Well, first, RCR is a multi-asset class REIT. It currently has 29 12 malls, 17. It's able to capitalize on favorable trends, at the same time mitigate favorable conditions in one asset class. Its mall revenues is a combination of fixed and percentage rent. With percentage rent, there's unlimited upside to the uncapped rent variability rent. So as more tenants buy from our malls, sorry, as more shoppers buy from the malls of RCR, the rent will continue to increase on the variable part. Secondly, RCR has a wide geographical presence. It's currently present in 18 key locations in Luzon, Visayas, and Mindanao. So it will mitigate concentration risk. Number three, RCR does not have any land under its name. So land being a valuable asset is great on the balance sheet, but it might be a drag on the yield given the high value of the land. As you know, in land, example, people like to brag that how much is the value of my house, etc., etc. But in reality, there's no monetization of that. You just have bragging rights, right? Unless you're renting your house, you're leasing your house to another person. But if you're just living on it, there's really whatever market value that it generates. It's really good to see. But of course, we need in RCR we need to monetize everything, right? Fourth, I think RCR has a diverse tenants. No, aside from the fact that the malls are anchored by our affiliates, and offices are 80% BPO tenants, so business processing outsource, one of the key drivers of the Philippine economy. And fifth, RCR has a strong management team. It has a combined management experience of more than 100 years. All the directors there have a combined experience of, if you add everybody's experience, it's more than 100 years. So that's, I think, the 5 things that I can say there's a comparative advantage that makes RCR great.
I see. Okay. So maybe you can share also with the audience, like as REITs, like what percentage of your net income are you required to declare to the shareholders?
Yes, by law, we are required to 90% of our income is required to be distributed to our shareholders in order to stand as a REIT company. So it's important for that because RCR does not develop any assets. I mean to say all assets there are income generating from day one. Actually, by law, what I forgot to mention by law, we are all that assets infused into RCR have to have a 3-year track record of profitability. Meaning to say these are tested already. So it's important for that. So when the assets are purchased by RCR, we're assured that there are sticky tenants. The tenants are there now. It's a more or less mature, because typically when a mall just starts, the tenants just start to ramp up their business. It will take time to reach its full potential. So that's why at 3 years the mall has reached full potential plus upside by contracted escalation rates. So that's also important for us.
I see. Earlier on, you mentioned about the option of buying the assets through debt.
Mm-hmm.
Um, I'm just curious why or when would you use that option versus say, share issuance?
I guess it's also a function of interest rates. Kasi the hurdle rate in buying an asset, as interest. Because example, if you buy an asset which is currently, if interest rates are at close to 6%, your hurdle rate, your asset should yield more than 6%. Otherwise, you'll become dilutive, right? So it's really a function of yields, right? Of how interest rates are right now. So because our RCR does not have basically most of the cash of RCR is distributed as dividends already. The cash it has in its books is used to maintain the assets for regular capex maintenance. So it's I think that will be considered at some point in time, but it will
But not
depend.
yet, not
Not
yet.
yet, but it will depend on a lot of things.
Including market conditions. And right now, interest rates are a bit high. Maybe, not that's not the best way to go about it.
That's correct. That is correct.
Okay, so let's move on to the next question. Okay, question on dividends. Ayun, I think you already answered this. How much is the indicative estimated dividend for this year, according to Ray and five others? And how do you ensure consistent dividend payouts, especially during economic downturns? I think, yeah, you kind of answered this already. So maybe you could again, repeat what you said just to drive the point and to remind investors para maalala lang nila.
Sure. I guess I cannot comment on the dividend yield because dividends, as you know, are is a function of the approvals of the board of directors of RCR. So it's done on a quarterly basis. What I can say is that the market cap, which is a function of the property income over its current market capitalization. So at let's put it this way, at 8 pesos, I think the cap rate is probably close to about 6% without the assets. And the cap rates of the assets that are to be infused into RCR at 8 pesos is approximately 8.2%. Yeah, so clearly you can see the discrepancy between the two. So of course, the lower the cap rate, the more profitable the assets are. Yeah. So what we can ensure, well, also, but historically, we've been giving away. Our share has been distributing increasing quarter-on-quarter dividends. But of course, historically, performance is no guarantee of future performance. But we just make sure that the assets we acquire have built-in escalation clauses. We maintain our malls and our offices very well to ensure the premiumization of both. So in that way, we can ensure the steady increasing profitability of our assets.
Yeah, so I'm just curious about this, no? Medyo, I don't know how relevant it is, but again, the question of Julius Leo and somebody else, like, how do you ensure consistent dividend payouts? Well, maybe, I guess the question, if I were in his shoes, is that how do you ensure consistent increase in dividend per share even during economic downturn? I mean, is there actually something that you can do about it? Or, I mean, what can you do to minimize the downside risk in terms of dividend per share?
I think when RCR started, no, we were at the height of the pandemic in 2021, right? So that's already an economic a black swan event in what the terms what happened, right? So but despite that, it continues to perform well. I guess to ensure that considered dividend payouts is number one. There's no in a particular asset that we have. We ensure that there is the tenant mix is right, that no one single tenant occupies more than X% of space, so that when one tenant's business is not performing well, there's other levers that we can hold on to. Number two, that's why it's also important that we are present in many locations. We are present in 18 locations. In fact, with assuming that this recent purchase or asset infusion is approved by all the bodies, we would be present in 25 key locations already, all across the country. So that's also important because whatever happens in one location, the others are supposed to cushion the impact. So that's why it's important we keep infusing more assets of various classes and various locations.
And yeah, this one, I mean, I think this is interesting question by Jordan and somebody else. How will RCR's dividends grow within a 10-year time frame? So I guess you cannot answer that directly, but I guess on the growth plans, like, is it more like, you'll just be infusing more assets, acquiring more assets from RLC? I mean, is that the plan going forward? And what can we expect more types of assets, not just malls and offices? Can we also expect, I mean, I think in the presentation you talked about RLC's other assets, like you have warehouses, hotels, etc.
I guess to highlight, no, I think RLC has just released its 5-year plan for to basically from now till its 50th anniversary. 5 years from now is RLC's 50th anniversary. So it's basically doubling all the current gross leasable area. So one of the levers of it is for RLC to replenish whatever it sold to RCR. So meaning to say, when it sells to RCR, example, 1,000 square meters, so it plans to replenish it through the sale. When remember, in order to meet the public float, RLC has to continue to sell shares to make room for public float. The proceeds that it gets, it is required by law to invest in real estate, and what it plans is to push it a bit further. As in from real estate, it will invest into recurring assets, income generating assets, which is replenishing its investment portfolio. So as the REIT cycle churns, it will continue to have steady stream of assets that we can RCR can potentially look at, subject to approvals by regulatory and shareholder approvals. So I think that the path to growth that is there for RCR. Also, currently RCR also only has malls and offices. On the sponsor side, RLC, it has hotels and logistics, the two other investment properties that it has at its portfolio. We're also excited for infusing hotels and logistics. Logistics, more particularly, logistics is something what we believe offices was about 10 years ago. Huge income potential, very profitable, EBITDA margins of about 90% for logistics. Means say it recoups up 90% of what it can spend. So for costs. So it's very exciting. We're just looking at the maturity of these assets and potentially infuse this into RCR at some point in time. In hotels, as the government keeps on pushing for more tourists to arrive in Manila, as the hotel's profitability and occupancy rate continues to increase, that's an asset class that we are looking from the sponsor to potentially infuse to RCR.
So more than just offices and malls. I mean, even more diversified. Yeah. And RLC will continue to grow. So even more. So it's like a cycle,
It's really a cycle.
Virtuous cycle. Yeah.
It's a good cycle. The REITs are very, very, very exciting because it recycles
capital.
Capital. So also what's important is as the thrust of REIT is basically democratization of wealth, right? So we want everybody, as you mentioned earlier, we want everybody to own real estate too. Instead of buying a property, you buy shares of the company. And and hopefully ride on the rental income streams.
Yeah. Okay. So let's move on to the next question. Okay. Okay, so we're now talking about the mga live questions, no, na they have.
Mhm.
So here's a question from Hermandi. May I ask for the cap rates and how were the malls selected? And what are their overall occupancy rates? Ayan. I guess, you kind of answer that. But anyway, we might as well talk about it again.
So I guess the cap rates for the new assets that to be infused are about 8.2%. So it's very accretive considering at 8 pesos at RCR's cap rate at 8 pesos without the assets are at close to 6%. So immediately it's very accretive in nature. How were the malls selected? There are a lot of factors that were selected. Aside from the required 3-year track record of profitability, occupancy is one. The malls are highly occupied. It's about more than 90% above occupied. And then what's exciting also to note that Magnolia Mall is included in the current list of assets for potential infusion into RCR. Magnolia being one of the flagship malls of RCR of RLC. So that really we all know how profitable Magnolia is. So that really bodes well for the infusion. I guess timeline for future this timeline as we provided an indicated timeline based on past performance. However, there's no, as I say, there's no guarantee
No
that
guarantee, yeah.
the same timelines would be followed. Yeah, but essentially, if things are okay, then we should look at the new assets based on the timeline indicated.
Okay. So next question. Okay. How will RCR address or restore its free float after capital infusion? Okay, it's currently at 35.93% according to Neil. And
Yeah, just like to clarify, the 35.93% was before the block placement of the sponsor last April 2025. Pre-infusion, currently the structure of RCR is at 42.57% free float currently, and with the infusion of the new assets, the potential projected public float would be 34.22%.
so you won't be violating any,
Of course, no.
yeah.
Before to infusion, that's why it's important that the sponsor is able to do successful block placements, huge block placements. So that will pave the way to more, as we can only infuse as much through property for share swap to the extent of the free float that it has. So basically, that's why it's important for the sponsor to execute well also.
Yeah. So the requirement of the regulator is that you should maintain a free float of 1/3 or 33.30%, right? At
That is
least.
correct. 1/3 of the expanded base.
Okay. So if you're in danger of going below that, you cannot inject any asset.
Yeah,
Unless you buy using borrowed money, which is not the best right now, right?
Yeah, that is correct. That's also possible, which is not.
Okay. Okay, do we have more questions? Okay, so from Rani O, since most of fundings will now be for the malls, is there a study of current occupancy rate and projected occupancy? What is driving decision to move towards investing more shopping malls instead of office? Yeah, I guess it's an interesting question. So why more malls this time around versus offices?
Correct. So I think current occupancy of the malls for RCR is at 96%. The occupancy of the new assets for infusion, the malls assets for infusion is also close to that level right now. So I guess the driving decision towards more to move towards malls. Well, because as mentioned earlier, malls have two components of rent. One is a fixed rent and one's a variable rent. So I will reiterate that we like going to the malls, right? So we can do a lot of things to the mall. So it's a reflection of the Philippine behavior, right, and the Philippine consumption, Philippine growth story. So with the variability of the rent, it has unlimited upside potential. Tapos also, and if you look at the sponsors portfolio, mall contribution for the sponsors revenue is about more than 40%. So it's a very interesting asset class, and we believe that these asset class are very accretive for RCR. And I guess in the move to shopping malls instead of offices, because it has already a lot of offices in its current portfolio. And the office portfolio in RCR right now is also doing very well. It's at 96% occupied. So it's really a shift towards to introducing a new asset class to RCR, and also to mitigate the possible risks that are involved.
Yeah, and I guess, like, given being an analyst also, like we've been looking at RLC as well. Like RLC has a lot of malls talaga if you look at its portfolio. So in that respect as well, if you had to pick and choose, mas marami kayong mapagpipilian na malls.
Correct.
At this point, anyway.
Yeah.
Compared to the offices, because the offices were the first to be injected kasi pandemic noon eh. 'Di ba? So mahina yung mall. So nauna na yung offices. So I guess now, consumption is picking up, and then RLC has a lot of malls. Then maybe, yeah, I mean it's more timely as well.
RLC on a total, including including RCR's 56 malls in its portfolio. So currently there's 56 less 9. That's about 47 malls in its portfolio right now, and less the 11 assets that are the 11 malls that were previously included. So there's a lot more in the pipeline to be considered. And also, of course, we want to reiterate that we want to let our shareholders benefit from the upside on the variability of the rent. So that is also important for us to make our shareholders happy.
Okay, that's good. Okay, so next question. Okay, what's in it for RLC to transfer assets to RCR? Yan. Kasi pagka tinransfer nyo, you will just distribute 90% of income to dividends anyway, versus just keeping all the assets. Ayan.
Well, yeah.
And give us, ayan. Tatago, in other words, sa inyo na lahat. Hindi nyo pay out. I guess, walang nawawala.
I guess it crystallizes also the value of RLC as we are able to infuse the assets to RCR. Of course, we note that RCLC is also a major shareholder of RCR. It's for the benefit of RLC to grow. Rather than itago namin, I guess it's also a function that when we sell, we are able to recycle capital, which is the true essence of the REIT, right? So whenever the RLC is able to sell the assets at a good price, it's able to use the money to build more malls rather than borrow from the banks, right? So or to raise a bond. So it's also important. So the cash that it gets, and it's required by the REIT law to reinvest its assets within 1 year. So the recycling process is truly works wonders for both RLC and RCR right now. So also an RLC note that when RLC distributes on the RCR, it unlocks the value of depreciation. Because REITs also we record assets, we record the income of REIT on a fair market or fair value method of accounting. So essentially there's no depreciation there, so it'll be able to dividend out as much as possible.
Yeah, and I think one of the benefits of REITs, no, is income tax benefits, no?
That is correct.
So, yeah, so although your float is 33%, since you don't have to pay taxes, then, you don't actually lose out on the whole 33, right? If I'm not mistaken, versus on the RLC
That is
level.
correct. On an
Mhm.
RC level, it also gets various income streams also from dividends, from the fees, the fund management, the property management fees. And also note that RLC leases the land. RLC does the land is not sold to the REIT company, so it also
Mhm.
benefits from that.
So you get a small rental income
Yes,
from RCR.
what we get, what RLC gets, it's 7% of our rental income. 7% of
Mm.
our revenues.
Okay. So, at least yun, no? We just made it clear. Kasi baka, syempre, medyo suspicious nga. Oo, pero, yeah,
What
I
we
mean, RLC also gets some
what we
benefits.
also want to emphasize that it's also that's why it's also important that RCR is the majority shareholder. Sorry, RLC is the majority shareholder of RCR. So it's not like, I guess, in some countries that the sponsor just sells and sells assets. No, that's why it's important as long as your objectives are aligned. So RLC's objectives and the RCR share of objectives are all aligned, and I mean to say, syempre we want everything to grow as big as possible in order to make the company as profitable as possible. That's why it will get more dividends accordingly, proportionate share of dividends accordingly.
I see. Okay. Okay, so next question from Hansel L. How big is the percentage of BPO tenants in your portfolio? With AI trends replacing BPO jobs, won't this be at risk? I guess this is a very interesting question, so you can answer that.
I guess the BPO tenants in our malls is about more than 80% of our tenants in the mall, in the office portfolio is sorry, more than 80% of our tenants in the office sector is BPOs. So I guess to answer the AI trends, based on the recent stud from 2024, due to AI, there was 8% jobs lost due to repetitive, because AI is supposed to replace the repetitive tasks, right? So there were 8% of jobs lost due to AI. However, there were new jobs created, which is about 13%. So net effect, it's a plus 5% increase in terms of due to AI. So I think like the AI can be a partner for growth also. I'd like to look at AI in such a way that how ATMs were developed in banks, right? So during the time when people said, "Oh no, there's ATMs," that means to say that the tellers will be out of jobs. Everybody will run out of jobs. On the contrary, the tellers were upskilled rather than do some perfunctory jobs. It was able to upskill itself to sell more products. The tellers is now able to sell other banking products, which essentially grows. So it's really complex. Actually, these new trends enable us to think out of the box and try to improve ourselves. So I think this is we will try to look at new things as complementary to us. That's also important that in terms of management, it's also important that the management develops a very agile way of thinking, of strategy. I mean to say, it's able to pivot easily. If there are new trends, they will look at the trends. We do not jump on the trend immediately, but we look at repercussions and what good can come out of it, right? So what new things can come out of these things.
Okay. So next question from JJ. Okay. Is RCR just limited to offices and malls? Or yeah, I guess we kind of talked about it. You can also inject other assets. And you're quite excited about logistics and even the hotels.
Hotels,
Okay.
yes.
So, medyo ano lang, pinapahinog lang, I guess. Okay.
Of course, we want to
Okay.
we want the best assets of the sponsor to be infused into RCR.
Yeah, okay. I think, yeah, this might be the last question, if I'm not mistaken. So yeah, we forgot to ask about this. What is the weighted average lease expiration per sector as of 2025? Which I think is quite an important question.
That's correct. The weighted average lease expiry is offices is about more than 3 years, and malls is more than 3 years also, the weighted average lease expiry. So, April, I'd like to add pala. So, I just remembered now that what's also important in terms of our tenants are BPOs. Kasi I remember whenever you sign up a BPO, like most of the offices, average age of the RCR offices are about 7 years now. So, I mean to say, whenever you sign up a tenant, we sign up a tenant for 5 years. Remember the tenant, whatever 1 peso we spend, every square meter, every 1 peso in square meters, the developer spends for the area, the tenant spends 3 times. So in order to recover that, it has to go basically a long period. So basically, we tend to enjoy the first tenant advantage because easily when you sign a tenant for 5 years, it's the natural course that they will sign up again for another 5 years because it's also in their interest. Otherwise, they'll be writing off their investments if they decide to move.
Yeah. They're fit out, no?
Yeah, that's correct. That's what that's what we want to espouse also. That it's also that's why BPO tenants are also are very crucial also. That we have 80% in BPO tenants.
Okay, so I think this is the last question that we have. Okay. So anyway, given that, so we're quite excited with the RLC REIT, and the new asset infusion would help grow the dividend per share. Guys, don't be worried. Kerwin has assured us that those acquisitions will be dividend accretive because the cap rates were quite high. Anyway, and of course, it will become larger, and that should be beneficial. And adding these malls will help, again, diversify the income stream. So they should be beneficial. Okay, so anyway, so with that, we would like to thank Kerwin, the Director and Treasurer of RCR, for today's event. Rest assured that we will continue to monitor the development of the company and provide you with the necessary research in our website.